Hey, what is going on, guys? My name is Nick, and in today's video, we're going to be talking about a stock that I discussed in a few of my earlier videos that has now crashed about 40%. And the stock I'm referring to is Peloton with ticker symbol PTON. After their Q1 fiscal year 2022 earnings report on November 4th, the stock tanked 35% in a single day, and ever since has been downtrending for the most part. So in this video, I'll be going over the details of Peloton's earnings report, the pros and the cons of buying Peloton stock, and then what I'm going to be doing with my own shares. Now, obviously this isn't an easy video for me to make, but I want to be completely transparent with you guys through the good and the bad, and not just simply sweep my bad investments under a rug. Unfortunately, this is the harsh reality of investing into individual stocks. Even when you're certain that your bull thesis is completely correct and that it's going to play out, you still run the risk of that investment dropping in value. Even the great Peter Lynch, who achieved a compounded annual return of 29.2% over a 13-year period while managing the Fidelity Magellan Fund, had several dud investments over his life that never panned out as he had hoped. It's also the reason I highly encourage all of you to do your own research, even though I might speak highly of certain stocks and do my own research, because at times I will and can be wrong. Anyways, if you do enjoy this video and all of my transparency within it, make sure to drop a like, as it does help support my channel. I really do appreciate that. And according to my analytics, only a small percentage of you are actually subscribed to the channel, so if you haven't already, please consider subscribing down below so you don't miss any of my future content. But with that said, let's get into my Peloton stock analysis. Alright, so what the heck happened with Peloton stock? Well, back in December of 2020, the stock was trading for over $160 per share, while it's now down to $50 per share, which is over a 65% collapse in a matter of 1 year. Much of this was due to the reopening of the economy as the pandemic died down and investors could kind of foresee that the sales would be soft for Peloton. But more recently, the stock is down 40% alone this month just because of their recent earnings report, so let's jump into it. So in their Q1 fiscal year 2022 earnings report, Peloton reported revenue of $805 million for the quarter, which only grew 6% year over year due to the slowdown in sales from the reopening of the economy. Then they reported a net loss of $376 million versus net income of $69 million in the same quarter last year, which was due to their expenses rising significantly year over year, as well as the reduced demand for connected fitness products. Peloton also lowered their guidance for next year down to $4.4 to $4.8 billion in revenue, and they are again expecting losses to continue. And based on the trailing 12 months, Peloton only had about $4 billion in revenue, so this would only represent about 10 to 20% revenue growth over the next year. Finally, Peloton had $924 million in cash and cash equivalents on the balance sheet, along with an undrawn credit facility of $285 million. Now, in all honesty, guys, this earnings report scared me, and this is because not only did the company lose a ton of money in the quarter, but they're also running short on cash. And based on the cash burn rate this quarter, they actually wouldn't even be able to survive as a business over the next year. And because of this, analysts asked on the conference call to the Peloton management if they're planning on raising capital via debt or equity financing. And the CFO basically said they're not needing to do so because they have enough cash to sustain their operations, and so they shouldn't be diluting shareholders or raising debt or anything like that. However, the very next day, Peloton announced a company-wide hiring freeze, which is certainly not a good sign, again implying that they're strapped for cash. Then just a few weeks after the earnings report on November 16th, the company just announced that they're going to be diluting shareholders to raise $1.07 billion in cash at $46 per share, which is of course after the massive drop in share price. Now, personally, I'm very unimpressed with the management for two main reasons. First of all, they basically lied to us on the conference call by switching their mind and diluting shareholders massively. And secondly, they should have foreseen the situation that they were going to need cash and actually take advantage of the higher market prices, meaning their higher stock price, and then dilute at those levels. Now, of course, they don't have a crystal ball to be able to see where the stock price is going to be in the future, and they were probably expecting it to be a little bit higher, but they did have all of this data about the market and then the slowdown in demand well ahead of investors, so they could have diluted well before this earnings report, in my own opinion. Ironically, the market appreciated the news of dilution, and Peloton stock closed 15% higher on the day, probably because of the offering already having a buyer in place, but then of course the next day it was down another 6%. Anyways, despite all of the negatives coming out of this earnings report, there were actually some positives, such as the subscription side of Peloton's business model. Peloton connected fitness subscriptions, which are their most lucrative ones, being connected to the bikes and the treadmills, grew to nearly 2.5 million subscribers, representing 87% growth year over year. Likewise, the digital fitness subscriptions, which are the cheaper option for customers only using their app, grew at a rate of 74% year over year to 887,000 members. So this just means that Peloton subscription revenue is becoming a much larger portion of their overall revenue, which is a very good sign to see in my own eyes. But now let's jump into some of the other pros and the cons of buying Peloton stock, and then I'll get into my own thoughts on what I'm doing with my shares. All right, so starting out with the cons of buying Peloton stock right now, there are a few notable ones to keep in mind. First of all, their connected fitness sales, which is the sale of their bikes and their treadmills, are actually falling. This is by far the company's biggest revenue segment, being the sale of those connected fitness products, and it was actually down year over year by 17% to $501 million. Secondly, we are seeing Peloton's margins becoming thinner because their expenses grew 140% year over year, while their revenue only grew 6%, which ended up massively affecting their margins. For the first quarter of fiscal year 2022, the gross margin was 32.6%, which was down from 43.4% a year ago, and it's expected to drop to 24% in Q2 of fiscal year 2022. And then for the full year, it's expected to stay around 32%. Thirdly, Peloton is seeing reduced advertising efficiency. Peloton spent $284 million on sales and marketing in the quarter, which was an increase of 148% year over year, while their revenue still only increased 6% year over year, so advertising spend now represents 35% of their revenue. And again, this is likely due to their reduced demand for the products and the prices being a little bit too high, which is why they did initiate those price drops. And again, for the Bike Plus, they do have a promotion on right now for $450 off for the Christmas season, so that's probably not a great sign. And finally, the competition in the connected fitness space is ramping up significantly. As of now, some of Peloton's main competitors are Apple Fit, Nike Fitness, Beachbody, Echelon, and Nordic Track. So it really does seem like the story around Peloton is changing and their demand is dropping drastically over these past few months, which is not a good sign. However, there are some pros to take away from Peloton and some reasons to buy the stock on the dip. Getting into the first pro for buying Peloton stock, the revenue growth is still very strong over a 2-year period, being up 250% compared to Q1 of fiscal year 2020. So basically, we saw that huge acceleration in revenue growth over 2020, and then over 2021, it's very minimal at 6%, but when you average it out, it ends up being about 80 to 100% compounded annual growth rate per year. So in my opinion, we should return to double-digit growth within 2022 or 2023, as they are expecting, and that should ramp up slightly as the industry gets back on its feet. Secondly, Peloton subscription revenue is still growing very rapidly, and this is arguably the best part about their business. Again, they saw 87% growth for their connected fitness subscriptions and 74% growth for their digital subscriptions. And to boot, their gross margin on the subscription revenue side of the business remains quite high at 66.7% in the quarter, meaning if they're able to build this into a much larger portion of their overall revenue, they should be a very profitable business. Now, this was my main bullish point on Peloton, them being an undervalued subscription-based business model. And so most people focus on the product and the hardware side of Peloton, whereas I try to focus on the subscription side because I can see that growing into a much larger portion of revenue over time. However, at this point, those connected fitness products are still their bread and butter, so this is obviously impacting the stock hardcore right now. And Peloton needs to focus on continuing to grow their hardware revenue in order to be able to get those connected fitness subscriptions, so they go hand in hand. Now, moving on to their balance sheet, Peloton now has a ton more cash available ever since that $1 billion equity offering, which should allow them to fund their operations over the next year or two. Also, historically, this is the worst quarter for Peloton that we just saw in their earnings report, so moving into the winter months and then the New Year's resolutions coming very soon, that's obviously going to boost their demand, and so we should see an uptick in the revenue. Now, the next bullish point I have is that Peloton still has an incredible brand and people absolutely love their products and services. To give you an idea of what I mean, Peloton's app actually has a 4.9 star out of 5 rating in the App Store based on 47,000 ratings, so that is awesome to see. And it is ranked number 12 in the chart for health and fitness, beating out iFit, Nike, Echelon, and basically all of their other competitors. And that is because the service that Peloton offers is far superior to anyone else in the industry, and they focus a lot on value creation for their customers. And as I've said before, when it comes to a successful company, you need to find a company that is customer focused and value driven, and I believe that Peloton is focusing on both of these avenues, so I think that they have a really great platform and that it's going to continue growing. Another metric that Peloton reports to prove that their customers really really love their products and services is the low churn rate. So in the most recent quarter, the net monthly churn was 0.82% per month, with their 12-month retention rate being 92%, which is great to see that most people stick with Peloton once they try it out. Peloton also has some other growth levers within their business model that they haven't fully taken advantage of yet, and here are some of them. First of all, Peloton just announced a new product that they're launching in 2022, and this is known as the Peloton Guide, which is their first strength training product. Essentially, it's a camera that plugs into your TV and records the body movements while you're doing your workout, and it uses AI to improve your form within the strength training classes that they offer. And you can actually use your own weights, which will save a lot on cost for the customers. Additionally, you do get a heart rate band and then a remote for the product, and it's starting at $495 US, so we'll have to see how that plays out because it is quite expensive. But I do think it's great that Peloton is diversifying their portfolio of products beyond the bike and the tread into more of strength training equipment, and I feel that this is going to continue going forward, as the management has said they're going to be launching new products in 2022 and for many years to come. Secondly, Peloton does have a lot of growth to be seen in the Precor acquisition, and so with gyms reopening and new equipment being needed, Precor is going to make a lot of sales, and obviously this can translate to hotels and other commercial avenues. And obviously this acquisition does give them that US manufacturing presence, so they're not going to have to rely on the freight from other countries, and they'll have their products directly available within the US. Thirdly, Peloton is focusing on expanding to new markets like they did in 2021 into Australia. So right now I believe they're only available in the US, Canada, the UK, and Australia. So only 4 countries, and they have tons of room to grow in the future. Fourthly, Peloton does now offer a corporate wellness program, which they did announce in 2021, and many companies have registered for this. And Peloton now has partnerships in this corporate wellness program with United Health, Samsung, NASDAQ, SAP, and Sky, among others. Fifthly, Peloton now offers their branded Peloton apparel, which is kind of like Lululemon's apparel, and Lululemon has had huge success in this area, being a massive company, much bigger than Peloton, so this is a huge growth driver in my own opinion. But not only does Peloton have internal growth levers, they also have the entire industry that's growing with them. So there's obviously going to be a ton more people involved in the interactive and digital fitness space within the future, and app downloads are going to explode according to all of the metrics that I've seen. And I also believe Peloton is a great play for the upcoming metaverse. Right now, the company is involved in digital fitness, which is only based on a screen, but then they could also transition to being a virtual fitness platform where you could have some type of headset and then do a workout with a bunch of people around you, like you're in a class, but you're actually at home. So that would be really cool. As for their valuation, we can see that Peloton has a price to sales ratio sitting at 3.6 right now, which has come down a ton from over a year ago being over 10. And in my opinion, this really isn't that expensive considering that the company will continue growing at double-digit rates in terms of their revenue for years to come. And finally, the last somewhat bullish point for Peloton is the fact that it's not just them feeling the pains right now, their competition is also feeling the pains. The entire interactive fitness industry is hurt by the reopening of the economy, but I'm sure it will rebound come 2022 and beyond. For example, Beachbody stock just dropped over 20% in a day after reporting subpar earnings like Peloton, so I'm somewhat reassured to see it's not just Peloton's demand dropping off dramatically, and so they should see this rebound along with the rest of the industry in 2022 and beyond. Overall, guys, I'm not very impressed with the most recent earnings report that Peloton came out with, and as to be expected from the recent stock price collapse. And I'm also very disappointed in the management for the reasons that I discussed earlier. They could be way more transparent or give some type of warning or just dilute the shareholders at a much higher stock price. I think that was insane. However, I'm not abandoning Peloton stock quite yet, and here's why. I still really like the company for a few main reasons that was my original bullish thesis. Namely, their excellent app ratings and their brand recognition, and the fact that people absolutely love their products and services. That hasn't changed at all. Secondly, their subscription revenue is still growing at a very rapid pace, nearly 100% per year, and it is making up a much larger portion of their overall revenue, which I really love to see, and that was part of my original bullish thesis. Third, Thirdly, Peloton does have a lot of growth and expansion opportunities. For example, their recent product that they launched with the Peloton Guide, but then also the new markets such as Australia and then different markets across the world. So I think they have a lot of growth potential if they can execute. There's absolutely no doubt that Peloton's going to have a rough year ahead, but I am pretty confident that the company is going to be a much larger company within the next 5 years. Now, the company is being impacted much harder than I initially expected from the reopening of the economy, but I do believe that they will continue to grow back into those double-digit rates sometime in the future, whether it be 1 or 2 years from now. So personally, I think it's a mistake to be selling Peloton after this massive stock price drop and at these lows where the price really isn't that expensive based on the price to sales ratio. However, I'm also not a buyer because I'm going to be waiting for the next earnings report to be able to see how Peloton continues to execute according to their plan and to see if the demand continues rising up a little bit or if it stays flat or if it keeps dropping, because that's going to be a huge indicator on whether I plan on holding or selling Peloton stock in the near future. So I'll just be holding my shares in the meanwhile, but let me know what you think about Peloton stock. Do you think it's a buy right now? Do you think it's a sell, or would you plan on holding your shares if you had any? What are your overall thoughts about the company, and do you think it deserves this massive collapse in share price? But yeah, anyways, I really hope you guys enjoyed this video. It was really tough for me to mention because obviously I don't like seeing a stock down 40% in my portfolio, and it hurts a lot having to say that I made a mistake about this, but I want to be completely transparent with you guys through the good and the bad. So don't forget to drop a like on the video if you did enjoy, and subscribe if you haven't already so you don't miss any of my future uploads. And with that said, I will see you guys in the next one.